Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on the gold market. So you can see our yesterday's setup started well. First we were waiting for a grabber for the whole session because we started the discussion right on Monday. Once we have got the grabber, we said, well, you could try to sell, because yesterday we discussed the head and shoulders patch that was forming. And we call you to not wait for 618 resistance as usual, the top of the right arm of the shoulder, but starts to accumulate position right starting from the 30% retracement. And indeed that has happened. So here's actually retracement was a bit smaller than the 618, and market now is dropping. So where I keep watching, overall setup is behaves right now accurate and in a proper way, so nothing wrong with this. Tomorrow we should be careful around the non-farm payrolls release moment, so because some surprise could be on this data release, but if they will be slightly positive than expected, you could see that maybe acceleration will continue here. Meantime, currently, if you'll take a look at the 4-time frame chart, market stands at the support. So today in the Great British Pound analysis, we also talked about this. This market stands at support, and here is some pullback within the few hours is possible, not because just of the trend line support, but by this reason as well. As you can see, here is actually the wide big triangle is forming. Usually when market intends to show the downside breakouts, it could show the pullback here, but it could stop somewhere in the middle of the triangle, and then market could reverse and down and drop down. So this is classical way of the downside breakout. When the market is not able to reach the opposite border, stops in the middle and turns down again. So here's could happen the same thing is if of course the gold still keeps bearish sentiment. Currently we suggest that this is so. It means that on the hourly chart you could consider these things. So first of all, here's the entry point that we discussed yesterday. So currently you could protect your positions with the stop even break even stop orders and see what will happen. Overall sell-off stands really nice. So you can see here some significant acceleration stands right to the OP target. Actually, if you're a trade very short term, your target is already met because market has completed the OP as minimum target of the hand and shoulders we usually consider. And this trade is done if you're trading just this patient. If you'd like more, then you should be ready for a pullback, because take a look, with the OP market dropped a bit lower and then returns that back up. That could be the wash and rinse. So market drops below the OP, grabs the stop here. Those who taking the long position right in agreement support OP 1936 fib level. A lot of positions probably have been taken here. Here's market also has formed mine and got people to sell, if you could see. ABCD retracement and then collapse again. Now returns that back up. So since we have the double support, this area and the support line on the follow time frame chart, market could show a bit deeper retracement. In the middle of the range, it could be retesting of the neckline, for example, or something of that sort. Because here you could consider minor head and shoulders could be formed. Left shoulder, head, could be right shoulder, and some ABCD retracement right back up to the conference resistance. So that's the level that market could reach in the pullback. It is preferably that market will not break it up. That will be bad sign if market will break it up, and it could put under question on the hazard of the destruction whole bearish context that we have, because returning right back up above the neckline of the head and shoulders will be negative sign for the bearish context. That's why for us it's perfect if market will show upside ABCD retracement right to the 1955 or even smaller retracement and then continue downward action. Next target will be XOP 1912, but that will be already in an area below the trend line, and in the current circumstances the XOP is the not very important target, because in this case if market will out of the triangle starting downward action, we're going to daily time frame, and here is intraday XOP makes not big sense. So here we're turning to the large ABCD pattern after that. So that's things to keep an eye on. If you would like to take another position, or if you have missed the entry, you could consider this level. In this case, you will be able to place relatively tight stop slightly above this area or just above the 618. This will be enough probably. Also consider this ABCD pattern, so if it will be agreement and it confidence resistance, it will be a great chance. Other who would like to keep the position, well, just control that market should stay below this area. We do not want to see the upward breakout and upward continuation here. So, but currently by far, overall situation stands normal. Nothing really outstanding we see. It's one thing that's interesting is what we'll get on the non-farm payrolls release. Well, but currently everything is going well.